Have you ever entered into a trade and watched it immediately go against you after entering? And instead of you getting out like you told yourself that you would, you're now starting to say things like, yeah, it'll come back. And as you continue to stay into those trades, you then further see your account just depleting. But I gotta ask you, was it because the markets told you to stay into those trades? Or was it you not accepting to be wrong? Because the thing that us as traders we have to understand is that every single candlestick that shows up in the chart is showing us a story. And if we're not listening to that story, then we're going to find ourselves getting emotional based off of what we want. And we're trying to somehow change the story as to what the markets is telling us. But then when things don't go our way because we have created a different story in our heads, it's not the market's fault, but it's us going off script. Because what I want to submit to you is the same way that you make decisions based off of your emotions, there are others that choose to operate off of fear to enter into the markets, while there are others that only seize the opportunities to turn their ideas into more profit. And then there are those that only want to see all the lack that's in their lives. And so then they go out and try to be greedy and over leveraging their account because somehow they believe that the markets owe them. And the truth is this: we have both objectives. The market has objectives to make money, while you also have objectives to make money. But I'm here to tell you, if you're not willing to stick with the story of what the markets is telling you, of where it's going, you're going to find yourself making emotional decisions that are going to be playing right into their hands for them to make the money. So today in this video, I'm not going to only just show you how these candles plays a huge story in terms of whether you can receive that opportunity to capitalize on those, but I'm also going to be revealing to you the emotions of why these candles move in the way that they do to make a certain reaction happen out of you. Because once you understand why the markets is moving the way that it is, you'll find yourself not having to chase the price, but now you can actually start to anticipate behavior so that you can increase your probability of being able to be a profitable trader. So let's jump right into it. So the first point that I want to highlight, specifically where most traders go wrong, is this zone here. Because see, this zone here, most traders, when they see that there is a massive buying pressure candle, they believe that now they feel like they're just missing out on a trade. And so at this point, this is creating FOMO in the market, is what we call it, where people are specifically thinking that they missed out on this opportunity for them to actually make money. And so what happens is, in your mind, if you feel like you missed out, you feel like, well, I don't want to miss out anymore. So I'm just going to go ahead and enter now so that at least I can make something off of what it is that I'm seeing, because it's clearly going up. And so then you start to see this stall happen at the very top, right? And so they're just like, okay, this is completely fine. But then the next candle, they see this happen. And this is where now your emotions is starting to get the best of you, because you see you entered up here, right? And so what I want to share with you is this is not random. Because once when you understand where to buy from and where to sell from, this is going to become a lot easier to why you're not supposed to buy up here, regardless of how big this candle is supposed to be. And so the first thing that I want to share with you is this. In order for you to understand where it is that you're going, the price is going to continue to keep printing to the right. And so as prices moving to the right, we got to understand what is behind us on the left-hand side so that we can understand how we're going to position ourselves forward. Because, you know, there is this saying that says, show me your past and I can show you your future. And so if we can kind of take that into perspective, here it is. In the past, it showed us that price was shooting up and having a impulse. And when it got up to this previous point, it showed us, for whatever reason, there was a stall here, right? This point here is what we actually call a supply zone, also referred to as a resistance zone. A supply zone is any time that, if we're talking about a store, for example, when that store has a significant amount of supply in that store, they are now wanting to sell off that inventory for profit. Because if they don't, they're going to be in trouble. right? Because they got too much inventory that they don't know what to do with. But simultaneously, there's something that's called a demand. And when something is in demand of a store, right, more people are going to want to buy it because it's more valuable to now that customer and everybody wants it. And so that's what actually continues to keep the price going up further when it hits a demand zone, or when it hits a supply zone. That's why the prices fall. And so what we got to understand as traders is that even while you're taking a buy, somebody else has to actually be selling off their position to you for you to even get into that buy. And so at every second, there is an exchange that is happening where if you're buying, somebody has to be selling that same position back to you. And so that is the way that we do things when we're in a store. Somebody has to be buying while the other person is selling that product to somebody. And as a result, that is how that exchange is happening, and that's how you're able to make money. And so if we understand these supply zones and these demand zones are a real thing, then now we can actually start isolating the chart to understand that where there's a supply zone, it's more likely for there to be a sell-off that happens rather than for it to be something that increases the prices, like a demand zone. And so understanding these elements, this is why when new traders are entering into the markets and they see this massive spike, the markets understand what it is that they're doing because they realize that most of the decisions that most people make are emotional in some kind of way. And so even though that the markets is trying to communicate something to you, and if you're getting over invested into that trade just because you're in that trade, you will make the certain decisions that you wouldn't have had if you were just spectating. And so this is why we have to understand what happened in the left-hand side to understand what could potentially happen now on the right-hand side. And so, as we can see, history is repeating itself. It didn't do something necessarily different than the other one. More so, just gotten a spike and came to the zone faster than the previous, but simultaneously, it printed the same actual candle pattern. And this is actually what we call an evening star. And the easiest way to identify an evening star, to know what it is see, an evening star, it represents how you got a sunrise and a sunset. And so if you think of an evening star as if it was the sun, for example, during the time of the evening, is the sun going up during that time or is it going down? It's going down, right? So this can help us to understand visually that the reason as to why it was called an evening star is because this is in reference to it being a sell-off or a supply zone for the market. And so here's what we got to pay attention to, because see, in the past, it's already revealed to us that that has already been a common area where an evening star has already been formed and created. So just let me drag this over here. And there you go. And because see, here's the important thing that we have to take away from this. If we weren't looking left from before, there would have been no way for us to actually understand or even anticipate that potentially we are now approaching a supply zone or a resistance. And so for us as traders, we can't just get so caught up into every individual single candle, because again, if we're not able to look well what price was doing in the past, because again, the price is moving based off of our human emotions. And how is that going to affect most traders if they're operating based off of their emotions when they enter into a trade? And so this is why it's important for us to most importantly stick to the plan of the strategy that we're specifically entering into the market for. Because if we don't, the emotions that the market knows that if it's able to create these spikes, it knows that most people are going to take the bait. And so again, we got to understand what is the story that the markets is already telling us. Then we can actually capitalize on these movements because we understand that most people are going to get caught up in just the noise. And so here's a good analogy between buyers and sellers. See, buyers and sellers are are always fighting each other. And so the way that I want to describe this is it's something like tug of war, where you can imagine that, let's say you got the buyers that are the adults, and then you got the sellers that are kids. And let's imagine that here it is, if you had to guess who is more likely to win that tug of war, more than likely you'll say The adults. And you might have your various reasons of saying, well, yeah, because they might be naturally stronger. But I will always submit to you that it's based off of the conditions itself and what the conditions are actually telling us. Because you see, here it is. Yes, at some point, those adults, because they are stronger in the moment, they'll win that fight. But what happens when the adults are actually starting to get tired? And you see, these kids are just ready for these adults to just light up just a little bit. And all of a sudden, you got this massive momentum for now the sellers now taking over. And so that's what we have to look at in this market is that there can never be just always the buyers continue just to continue to push the price up, because what goes up eventually must come down. It has to recover. And so the way us to look at this is, here it is, the adults are just sending the price up. And the kids, as much as they want to, they're like, nah, we're pushing the price down. And we've seen there was a little bit of a struggle here. But overall, we see this upward momentum. And so the way that we got to look at these supply and demand zones is that here it is, the adults were getting extremely exhausted. They did their last push. And the moment that the kids were able to see that, they're getting tired, let's do it, guys, they start sending the price down. So as the adults are trying to recover, trying to catch their breath, here it is, the kids are just letting them have it. And so this is the story that we have to look at, it is that they are always at a fight. And at some point, somebody has to win that fight. And so what we got to remember is based off of the conditions themselves. Yes, because the adults, naturally, they will be stronger to actually win against the kids, but not in all scenarios is the adults always going to win over the kids. So again, there is a story that is showing us that predominantly where sellers are going to have their biggest push or their biggest momentum that they can drive into the market is going to be at a higher position for them to have more of a probability of winning more of those fights. But then you got for the buyers that naturally taking a lower position shows us that this is where majority of their strength is coming from. And so we got to look at it as, here it is, the buyers are now stepping into sellers' domain. This is their home court. And so they know their home court to, like the back of their hand. And so imagine if the sellers know all of the routes of how to get in and out of their base. And here it is, the buyers, they don't know where it is that they're going. And so they're walking into a territory absolutely blinded. And this is why the sellers are just as easily able to dominate in those areas, and then vice versa. So the picture that we have to always keep in mind is the supply zones, also known as a resistance, right? And then the demand zones, also known as the floor or support. And so let's look at an example of what that could show us, a reverse, but on the demand zone for the buyers to step into the market. So here we can notice that what started this move was here. Okay. So this right here is what allowed the buyers to absolutely dominate and step into the zone. And if you notice here with these wicks, even the wicks themselves on each candle actually paints a picture in terms of what was specifically happened within that candle before it closed. So notice how the sellers wanted to continue to keep pushing the price down. The kids were just like, no, we want to just destroy you guys. Okay. But then here it is. Something happened to where even though the sellers had the opportunity to push the price this far down, the buyers actually stepped in and actually increased it back up to a much further higher position. And so this is showing us that now we're actually starting to get some level of support being created because the parents are now saying, hey, look, we got in that Gatorade that we need. We all fired up and now we're going to do our work. And so here it is, they're pushing the price up. And so what it's communicating with these three candles here, this is actually what is now known as, it's not necessarily a morning star, which I'm going to show you a reference of that. But this particular example is actually called a Raleigh base rally. And so what that looks like is the Raleigh is the bullish candle pushing up. And now we're starting to get the base that is actually creating a resistance level where the sellers are wanting to continue to push the price down, but they're not able to because all the massive buying pressure, as we can see with the wicks, is starting to create a support level at that zone. And then we get the final confirmation of the last candle that gives us that last rally that we're looking for. And so normally this middle candle between these three different sequences, this is what's called rally, base, rally again. And so at the equilibrium zone is where you can actually set your entry, because that middle candle is showing us that there is resistance in this level, in this zone. And so the next candle, if it were to push down as we've seen with this wick rejection, is showing us that there is a potential for it to show us that base actually is now using it as a floor to actually spring up and give us that extra momentum. And so we got to remember that the psychology behind this is, again, when we're seeing all of these massive movements for the sellers taking over, and you're not able to identify what the market is telling you in this very moment, you're still trying to take sales. And as you're still trying to take sales in a domain where there is buyers just sitting here waiting for people to send the price down, they're now ready to stop the price. And because the buyers are all in agreement, this is why the price starts to shoot up. Because it's obvious for buyers to see, if we were to look in the past, there's going to be an area where buyers has been entering into that zone multiple times, whether it was reverse, where there was a resistance level, and it's using it as now a new floor because it's broken above, or did it swap? But now we're starting to see that this is the new evidence of what it's showing us now. And even if we even look further left or further to the right now, because this is what happened in the past, this is now in the future, we see that price then came back to the same level, and look what it's doing again. It's printing us candles that are reflecting that buyers are continuing to keep pushing the price up. And so the example that I also want to show you is the evening star example, and we have that right here, where normally this mid candle is always going to be smaller than the opposite candles on both sides to actually create like an arc motion. But this is again another indication that buyers are wanting to step into that area. And again, you're always going to take that middle candle as your entry. And then as you can see, if you look to the right now, when price came back down into that entry, then now you can now ride the price up. But even if you look further left, what else do we have here? And so this is something that price is doing time and time again. And if you're able to watch and keep an eye out for these patterns, then now you can actually start to anticipate where you need to start setting up your entries. But based off of knowing where the buyers are going to be and where the sellers are going to be, and where are you going to position yourself, whether you're going to be a buyer in this moment now, or you're going to be a seller based off of what you see. And the last formation that I want to show you that can also be an indication of a reversal happening in the markets, where prices wanting to go the opposite direction, and where most people are still missing the mistake because they're not allowing the markets to show them the story that's unraveling right before their eyes. And now, if you see here at the top, this is what we call a bearish engulfing candle, which is now saying that this previous candle of the buyers stepping in, as we see that it just created another higher high scenario, but then the next candle that got produced was a bearish candle, but it actually went further down from where the price opened up on the buyer side. And so this is what is called a bearish engulfing, because it engulfed the previous candle. And so I like to look at it as like Pac-Man, right? Where notice how Pac-Man is in a way consuming everything that he comes in contact with. And so he's running at this stuff because he's naturally stronger. And so here it is, the sellers now are telling us that if they're able to engulf the previous bullish candle, then that's telling us currently right now, there is starting to happen is a shift that's happening in the markets where the sellers are starting to get more dominant. And if they're able to engulf that previous candle, there's a good chance that a reversal may start to actually form and happen. And so as you start to continue to keep looking left, we see multiple rejection signs of sellers wanting to enter into the market. But again, because now we know how to analyze the story that is telling us, it's currently right now, sellers are starting to become more dominant. Why? Because it's their home court, right? The buyers have no reason for them to be going up in there. They're outmatched, they're outnumbered. And so again, if you're able to now start just to remember that you don't have to just trade based off of feelings, but now you can actually trade off of data based off of what other people are doing in the markets and what is more likely for other people to respond to, so that you're not finding yourself having stop losses that you're just not keeping. And so hopefully you're able to see the story now that the buyers and the sellers are always at a tug of war fight. And it's not always going to be the buyers that are just always going to win just because they're stronger, because they're adults versus the kids. We have to understand that there's a story that has been told time and time after again, that at some point somebody's going to get tired. And when they get tired and when they have to regroup, guess what? It makes it easier for the next opportunity to present itself so that we can understand who is now dominant in that specific area. And so what I want to share with you is use what the market is showing you and to not trade against it, but actually to trade with it. Because what I will share with you is this: what the patterns that we're specifically talking about is becoming more invested in terms of what the market is now showing you now. You're using the information of what you've seen in the past to have some kind of an idea of what could happen in the future, but you're not being paralyzed specifically by that, and you're allowing the information of what is showing you now that there could be a possibility that the buyers are now starting to step into this particular zone. And so if you're finding yourself still being in sales just because you see all of these massive selling candles, you have to also be aware that you're stepping in to buyer's domain. And so hopefully this video has given you more clarity on specifically what the candles are actually showing you, so that now you can make more informed decisions and increase your probability of actually winning more trades than you actually lose. And so if this video has blessed you in any kind of way, be sure to like, comment, share, and subscribe, because at the end of the day, we're all in it to produce more money for our families and continue to make that abundance that we know that the markets can provide us. But we got to trade with the market and not against the market. So stay blessed.